EBIT, earnings before interest and taxes, EBIT, remember? And then you subtract interest, $70, this gives you EBT, taxable income. Then you subtract taxes, this gives you net income or profit or earnings, same thing. Income, profit, earnings, same thing. And then, it may show you that you paid some dividends, 103, and the remainder was reinvested. 309 will inflate your equity. Remember the book value of equity. It will be added to your account. All of this will not be paid. In this case, all of your profit was not paid out as dividend. Only 103 was paid out as dividend. The remainder was reinvested. It's added to your account. All right, so any questions here? All right. Let's talk about taxes. Okay, corporate taxes, okay? Now, after the Congress passed the 2017 tax code, what we have is a flat tax in the US now, flat corporate tax rate. Corporate tax rate. This is the law of the land now, which is how much? 21%. Okay, 21%. Unless it's changed again, I don't know, and this can be changed again. So corporations pay taxes now, beginning in 2018. So if you're a corporation, if you're a business, and you are calculating your taxes for 2018, so you calculate your taxable income, multiplied by 21%. So for example, let's say your taxable income, after all deductions and subtractions, whatever expenses, labor costs, raw material costs, is $1 million. $1 million. Your tax calculation now is very simple. At 21%, your taxes will be $210,000. Which is what 21% of 1 million will be. So your net profit will be $790,000. This is the current story. Okay, current story. But it wasn't like this until 2018. So in all years prior to 2018, we had what we call a progressive tax rate. So I want to teach you that also because, we don't know where we are headed. And many countries in the world, they also use, So this is the flat tax rate versus progressive. Progressive doesn't have any social connotation, progressive or regressive, doesn't have anything. So the progressive, or the system that we had prior to 2018, according to this, the more money you make, okay, the higher the tax rate on the higher income level. Okay, so let me explain what this is. So please follow me. There could be questions like this on your quiz or on the test. So that's the flat tax rate. Let's talk about the progressive. This is the progressive. So I'll deal with it one at a time. So the government says, no, the 21%, and I'm changing it a little bit. The government says, let's say, everybody pays 21%. What if a business has an income of $10? That's too little, okay? So the government says, okay, if your income is, hypothetically, and I'm introducing the other tax system. The government says, okay, if your income is up to 10K, okay, we want you to pay 10% only. If your income is up to 10K, pay 10%. Any income above 10K, okay, you pay taxes at the rate of 21%. So now what I've done is I've changed from the flat tax rate to the progressive rate. You see what I'm saying here? So for example now, let's see what will happen. Let's say your income is $20,000. This is your taxable income. Taxable income is $20,000. Okay, so the government says split it two ways. Okay? Split this $20,000 into two piles, so to say, two lots. The first 10,000 you will pay taxes at 10%. Anything above 10,000 you'll pay taxes at 21%. So now what I need to do is make two sets of calculation as opposed to one set of calculation. So now what I do is I say, okay, the first $10,000 will be taxed at 10%, so my tax is gonna be $1,000. So tax will be $1,000. Are you with me? Okay. Now, how much more am I making? More than $10,000. So the difference now. So this is where I am, 20K. So this difference now, not all of it is going to be taxed at 21%. So the first 10,000 will be taxed at 10%. Anything above, so what amount is above 10,000? Another $10,000 is above 10,000. So this $10,000 will be taxed at 21%. So which will be 2,100, I believe. 2,100. Okay, so my total tax will be. So this is what I have done is shown you how a progressive system works.
So we just split it?
Split it and apply different tax rates, as the government wants us to. Okay. Yes? Why? Because the government says, for example, and we have a progressive system for individual tax rates. So the government says, anybody who's making $10,000, let's talk about you or me, anybody who's making $10,000 should not be paying any taxes. You see what I'm saying here? Because that person needs to pay rent, that person needs to buy milk, and things of pay tuition for the kids. So the first $10,000 should be tax-free, okay? Now anything above $10,000 should be taxed at 10%. So now you have the reason, why this is done this way, why governments do it this way. Many Democrats, and as I said, you don't know whether I'm a Democrat or a Republican, but I want to give you examples. If you read financial news, many Democrats are saying that people who make billions of dollars, they should not be paying, the same tax, Anybody who makes above $10 million a year, above that $10 million should be paying a super tax, maybe 60%, 70%. So below that, different rates, but above that, so this is called a progressive, tax system. I'm not saying it's right or wrong, okay? And of course, I can tell you that it will discourage, capital formation, and things of that sort. So if people will take their money. You see, there are many loopholes, okay? And people are able to find loopholes, to avoid paying higher taxes. Legally, yes. You don't have to be, breaking the law, so to say. There are legal loopholes available as I speak. Yes, you can do everything legally. So anyone has any question there?